Dear students, this is my second video lecture on chapter Definitions under Income Tax Act for subject Tax Procedure and Practice, Paper 1, class first year BCom, semester 1, Veer Nirmat South Gujarat University. In this lecture, we will discuss few definitions like definition of person, agriculture income, casual income, dividend and company. Let us see the definition of person as per Income Tax Act under section 2 subsection 31. According to the Income Tax Act 1961, the definition of person includes the following 7 categories. Number 1, an individual. Number 2, a Hindu undivided family. Number 3, a company. Number 4, a firm. Number 5, an association of persons, that is AOP, or a body of individuals, that is BOI, whether incorporated or not. Number 6, a local authority. And number 7, every artificial juridical person not falling within any of the preceding subclause. So, dear students, here the definition person includes all type of persons, whether living or a non-living, that is artificial person. Here are some examples of status of a person. Dr. Vyas, a professor in college. Here Dr. Vyas is a living human being, so Mr. Vyas falls in the category of person, that is individual. Next is Veer Nirmat South Gujarat University. South Gujarat University is a non-living person and it falls under the category of artificial juridical person. Mr. Rana, a sole proprietor of a firm. Here Mr. Rana is a living human being, so he falls under the category of person, that is individual. Surat Municipal Corporation is a non-living person. It falls under the category of local authority. Reliance Industries Limited, it is a non-living person, falls under the category of a company. Next, Vapi Industries Association is a non-living person, falls under the category of an association of persons, that is AOP. Next is ICICI Bank Limited. It's a non-living person, falls under the category of a company. Desai and Sons, a partnership firm, a non-living person, falls under the category of firm. Next, Surat People's Cooperative Bank, a non-living person, falls under the category of association of persons. Lions Club of Vapi Udyognagar, it's a non-living person, falls under the category of body of individuals. So, like this, definition of person as per income tax is an inclusive definition which includes 7 categories of persons mentioned here. Next definition, dividend. The term dividend defined under section 222 subsection 22 in the Income Tax Act 1961. Again, definition of dividend is an inclusive definition which includes number 1, any distribution by a company of accumulated profits, whether capitalized or not. If such distribution entails the release by the company to its shareholders of all or any part of the assets of the company. Here, first point mentions the distribution of accumulated profits during the year at the end of a financial year. It's a normal dividend. Number 2, any distribution to its shareholders by a company of debentures, debenture stock, or a deposit certificate in any form, whether with or without interest, and any distribution to its preference shareholders of shares by way of bonus to the extent to which the company possesses accumulated profits, whether capitalized or not. Here, second point discusses about the distribution of debentures, debenture stock, deposit certificate to the ordinary shareholders, as well as dividend to the preference shareholders in form of bonus. Next, see, any distribution to its shareholders of a company on its liquidation to the extent to which the distribution is attributable to the accumulated profits of the company immediately before its liquidation, whether capitalized or not. Here, point number 3 mentions the distribution to its shareholders at the time of its liquidation, that is, winding up of a company. Next and last point, any distribution to its shareholders by company on the reduction of its capital to the extent to which the company possesses accumulated profits which arose after the end of the previous year ending next before the first day of April 1993, whether such accumulated profits have been capitalized or not. Here, last point mentions the distribution of profits to the company at the time of reduction of its capital. Reduction of capital means internal reconstruction of a company. That is also before on first day of April 1993. Okay, so like this, dividend is defined under section 2 subsection 22 of the Income Tax Act 1961. It is also an inclusive definition. The next term is company. It is defined in section 2 subsection 17 of the Income Tax Act 1961, which means an Indian company or any body corporate incorporated by or under the laws of the country outside India. Here, second point mentions about the company incorporated under the law of country outside India. So it means it is about a foreign company. Next, any institution, association or body which is or was assessable or was assessed as a company for any assessment year under the Income Tax Act 1922, or which is or was assessable or was assessed under this act as a company for any assessment year commencing on or before the first day of April 1970. Here it is about a special nature company. Say for example, it is banking companies, insurance companies and other bodies incorporated or assessed as a company under the Income Tax Act 1922 or assessment year 1970-71. Next, any institution, association or body, whether incorporated or not, and whether Indian or a non-Indian, which is declared by general or special order of the board to be a company. Here, board means Central Board of Direct Taxes. So, the term company is defined under section 2 subsection 17 of the Income Tax Act. Our next definition is for agricultural income, which defined under section 2 subsection 1a. As per the definition, the following are treated as agricultural income. Number 1, agricultural rent or revenue, section 21a. Any rent or revenue derived from land which is situated in India and is used for agricultural purpose. Here, first point mentions the rent or a revenue from an agricultural land situated in India becomes agricultural income. B. Income from agricultural produce and from marketing process. Section 2A 1A-B. This second point mentions the sale proceeds of agricultural produce and a marketing process for the same is also known as agricultural income. And last point, C, income from farm buildings, section 21a C. So when any income derived out of these three sources, it becomes agricultural income as per the Income Tax Act. Here we have some instances of agricultural income. Number 1, income from use of land for grazing of cattle required for agricultural pursuits. Number 2, profit on sale of crops after harvesting made by cultivator or received of rent in kind. Compensation received from insurance company for damage caused to the crops by hailstorm or flood. This is about the compensation received from insurance company in relation to the damage of agricultural produce. Next, salary, interest on capital, share of profits, etc. received by a partner of a firm having agricultural income. It is point number 4 is about the income of partners from a firm having agricultural income. Income from running a dairy which purely incidental to agriculture. Here a dairy farming also an agricultural income. Income from growing flowers and creepers is agricultural income, and income from saplings and seedlings grown in nursery. So these are the few examples to understand the concept of agricultural income. There may be other examples of agricultural income. Instances of non-agricultural income. Number 1, income from sale of trees, flowers and fruits growing spontaneously in forest. Number 2, profits arising from purchase and sale of standing crops. My dear students, both the points are mentioning the same thing. If we are selling trees, flowers and fruits grown in forest, or profits arising from purchase and sale of standing crops, is a non-agricultural income, because no cultivation process is done by the seller of trees, flowers and fruits or a standing crops. Next, remuneration received by a manager as a percentage of profit from a firm having agricultural income. Here it is about the payment to manager, but not in the form of a salary or other remuneration. It is about a percentage of profit on sale. So it is a non-agricultural income in the hands of a manager. But for firm, it can be an agricultural income. Dividends paid by a company from its agricultural income. It is agricultural income for company, but dividend received by a member shareholder is a non-agricultural income. Income from fisheries, royalty income from mines, poultry farming, interest on arrears of rent payable in respect of agricultural land. Here it is not about rent, it is interest on arrears of rent payable, so it becomes non-agricultural income. Next, interest received by a money lender in the form of crops. If a farmer or a landowner makes payment of interest in the form of crops to the money lender, for money lender it is a non-agricultural income. Okay, our next term is casual income, which is defined under section 2 subsection 24. Again, it is an inclusive definition. Casual income includes any winning from lotteries, crossword puzzles, races including horse race, card games and other games of any sort or form, gambling or betting of any form or nature whatsoever. So here it is a casual income. The tax treatment of casual income is it is taxable under the head income from other sources. Students, as we know, there are 5 heads of income where casual income is taxable under the head income from other sources. Expenses incurred to earn such income is not allowed as deduction. My dear students, if somebody is purchasing lottery tickets, so whatsoever purchase expense incurred for buying lottery tickets will not be allowed as a deduction from a lottery price. Next, tax on casual income is deducted at flat rate of 30% for all assessees under section 115B. It is about TDS on casual income. It is at flat rate 30%. Losses cannot be set off against casual income. Even casual losses cannot be set off against casual income. Here it is about set off of losses of income of other heads as well as loss of casual income. It is not permitted or allowed as per Income Tax Act to set off any loss against casual income. No deduction is allowed under chapter 6A against casual income. Students, already we have discussed about the deduction of chapter 6A in previous chapter. Those deductions are also not allowed against our casual income. Dear students, thank you very much for watching this video lecture. Very soon we will meet with another video lecture in the new chapter. Thank you very much.